You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And today, well, we're going to talk about some high-tech stuff, some AI, some artificial intelligence, and how people are using that to maximize investment gains, specifically in the stock market. Now, before we get to that, I want to tell you this. I'm not a stock trader, okay? But I do find the use of this whole artificial intelligence and various aspects of finance fascinating, and I think it's really worth listening to. But before we do that, let's take a step back for a moment and realize that sometimes you don't need artificial intelligence to guide you. Sometimes you just need some common sense and some guts, right? And if you've got those qualities, you should be chomping at the bit right now. As Warren Buffett famously said, be fearful when others are greedy and greedy when others are fearful. This is a contrarian approach maybe, but it's also sort of kind of a type of make sense, common sense type of approach. And it's proven successful for lots of investors who had the courage to act when others hesitated. Okay, now you don't have to go far back. Historical examples are all over the place. Right? Following the 2008 financial crisis, you had guys like John Paulson and Sam Zell, capitalizing on all sorts of depressed real estate markets. Paulson's hedge fund reportedly made billions by purchasing distressed properties and securities, and Zell's equity residential acquired thousands of apartments at steep discounts. Now, the current multifamily real estate market, it provides another opportunity for people to make extraordinary profits. We are just at the beginning of this new cycle. That's what I'm telling you. There's a beginning, a middle, and the end of a cycle. And the beginning of the cycle is when things start, starting to sell at discounts. And then they kind of get, start to normalize. And then they start to get a little frothy. And then you have the whole thing kind of fall down again. So in this case, unprecedented interest rates increases have decimated property values, and that has created a unique opportunity for investors. It's also created, unfortunately, losses for investors, but you have to take advantage of the same situations that actually knock you down, right? You got to fight back. So the key to success in these situations is to identify markets that are temporarily depressed due to external factors rather than fundamental flaws. And so like what I talked about just a second ago, in the case of multifamily real estate, the current downturn is driven by interest rates. That's what it is. It's not a lack of housing demand. It's not a problem of oversupply. It's interest rates. And when investors purchase already discounted properties at high interest rates, they position themselves for further potential windfall gains at rates that eventually normalize. So again, you're buying stuff at a discount because it is distressed in this environment, and then interest rates start to fall, and then cap rates start to compress, and that's what happened. As interest rates decline, property values typically increase. Now, the moral of the story is, again, while fear may dominate the current market sentiment, history shows that those who invest wisely during the downturns often reap substantial reward. As Warren Buffett, the guy I quote frequently, says, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. The current multifamily real estate market may well be one such golden opportunity for investors with a vision and courage to act. All you need is some common sense and some guts. But this week's Wealth Formula Podcast, we are going to talk about more nuanced things that might require artificial intelligence. And we'll have that right after these messages. Okay. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Alejandro Lopez Lira. He is an assistant professor, Warrington College of Business, University of Florida. And he researches asset pricing, machine learning, and textual analysis at the University of Florida. He also has a PhD in finance from Wharton and an economics degree from ITAM. He is also advising hedge funds typically on implementing AI strategies over the past few years. He's the author of The Predictive Edge, Outsmart the Market Using Generative AI and Chat GPT in Financial Forecasting. Welcome, Alejandro. How are you?
Good, good. Thank you for having me. Happy to be here.
Yeah, the irony is we ran into all sorts of technical issues before this, and we're talking about technology. So it just goes to show it's an imperfect thing still in this world, right? And this is a fascinating topic. This is not something that necessarily I would say we don't talk a lot on my show about stock trading, but I think the technology and everything here is very interesting, whether people are into trading or not. But tell us kind of what AI is doing to the world of stock traders.
Yeah, so there's definitely many dimensions on it. So, before we used to apply AI to a wide range of numerical data, so mostly anything that had to do with numbers like firms' returns, prices, accounting variables, etc. That was like a big deal, and it turned out it worked reasonably well. It's always hard to invest in things, especially if you're competing against the very sophisticated players.
Right.
And it used to be the case that, only if you were a very large institution, you would have access to the latest technology, right? Like you would need to deploy your own algorithms, get on your own data and everything.
Yeah.
What lately has been happening is that more and more of these tools are becoming widely available for everyone. That doesn't mean everyone should use it, but it means that in theory, almost all of the best technology is out there for anyone to use. So, before you had to deploy your own algorithm, your own technology to study like first financial statements, now you can put a quick Python program and call ChatGPT or your favorite large language model and build an interesting application.
So, are we talking about, and specifically with the things that you're talking about, are we talking about trading? Or, I mean, could this be used in any type of stock investing? I mean, what comes to mind to me is like, when you think about Warren Buffett, for example, like he's so famous for, utilizing Benjamin Graham's ideas in terms of identifying stocks, for value and, going through huge amounts of data. I mean, like that's what he was famous for in part, right? It was like going through and just like literally spitting out all this information, but you don't really need to do that if you've got AI. So when you talk about using AI, are you using it as much for like say day traders as long-term trading or both?
Yeah, so there's definitely application for both. I think on the day trading side, it's very clear what you want to do. Like, I mean, if you're doing day trading, and I don't know if I recommend it, but if you're already committed to doing day trading, the types of AI available are like, the classic ones. So you would have a bunch of numerical data and put your favorite algorithm and just run it through, or just now with the latest technologies, with the latest large language models, what you can do is exploit a lot of high frequency data in the form of text. So news headlines, macroeconomic reports,
Yeah.
etc., and just run through the algorithm, get an output, and use that as part of your day trading. Now, for the longer term investors, it's a little bit more complicated. You can definitely program, I don't know if program is the right word, but you can definitely prompt large language models to get a very useful output that would be sensible for long-term investors. The only issue is that because large language models basically know everything up until 2023 or something, so like a
Yeah.
couple of months ago,
Yeah,
you
that's
cannot really
interesting.
do anything out of sample for long term. You can do it for day trading because 1 year or two of like daily trading strategies is like good enough to get a good sense of the whether it will work or not. But it's harder to justify it for like longer term investors. So it's not really on the we cannot
Hmm.
do it, it's we cannot really evaluate it well.
So when you're doing it for day trading, you're not actually you're using more sort of the patterns because you can't, as you said, you're not really, your data is limited to like, 2023. So like, how does that work if you're actually using AI, Chat GPT, or whatever you're using to implement, day trading? Like, what does that look like?
Yeah, so a lot of it would just be, you get a sense of the new events that are arriving, like whatever news happened today, politics, macroeconomics, otherwise, and you want to have a model on how that is going to impact whatever
Mm,
stock you are investing at. There's a lot of information coming on every day, so definitely like for a big pass filter, these large language models are helpful. Just at the very basic sense of like, this seems useful for the company or not, or like this seems dangerous for the company and so on. So it would definitely be automating most of the systematic part of just like, oh, this is the news headlines that came out. How is this going to affect this company? This is the news headlines. How it is going to affect
And
this company?
what kinds of programs are actually already available to people who are maybe they are already doing day trading? Are there programs specifically out there that are commonly used, or are these things that basically people are kind of creating for themselves?
I think it's mostly the second side. I haven't seen any comprehensive software platform that incorporates it. I think somebody could do it if they're interested in. I just this is more of a newer thing. So I, at least in my experience with most of the, let's say, non-institutional day traders, they would focus on one or two firms and just deeply, deeply study them and just study the price patterns and study the news impact and everything. So maybe they don't find the need for these high processing capabilities. Whereas for investors that are dealing with a lot of firms, it's just very impractical to try to pay attention to all the news that are happening every day for all the companies. So this is a part that you can automate.
Yeah. When you think about the bigger picture here of artificial intelligence, there was a big gap between the technology that's being used by institutional traders and big technology and real time trading with robots. And do you think that AI closes that gap at all for individual traders?
So the answer is a little bit. Markets are very efficient already, so it's extremely hard to go and make money out of like trading on Apple News or something like that.
Yeah.
But there is some space where institutional traders cannot trade, either because of constraints, institutional constraints, or because the space is too small. So for example, for a lot of like really small companies, most funds cannot even pay attention to those because if they try to trade on them, they would move the price so much that it's gonna wash away any profit. Whereas obviously if you're investing like very little amount of money like me, you may be able
Yeah.
to like profit on those trades. It's not super attractive for the big investors, and it's too risky to to
Yeah.
make it worth their while.
Well, that's actually a very interesting point. So what you're saying is that there's almost these different tiers of trading where if you're too big, it doesn't make sense to get involved because you're going to move the market yourself, and so that leaves this sort of this vacuum for retail investors. How do people identify which kinds of stocks that might fit that mold rather than competing with the institutions?
Yeah, so it's mostly going to correspond to stocks that have a lower volume than usual or stocks that have lower price than usual. So a lot of institutions just have a very crude requirement that the price should be above 5 and that the daily volume should be above $1 billion or above $500 million. So things like that.
Yeah.
Normally, the lower you go, the harder it is for them to place a trade. That doesn't mean that the trade is riskless, by the way, because you're also kind of like putting liquidity in that market, and you may get you still have like the usual risk, but it means that usually you are in a space that most of the institutional traders are not competing. My sense, for example, is that alternative asset classes like crypto are also in this sense unexploited because of the institutional constraints. So something we do in my research, I was testing how good ChatGPT is at forecasting stock returns using news headlines, and the answer is like it's good. And unsurprisingly, the predictability mostly happens in smaller stocks and on the short side. Those are the places where it's harder for institutions to take advantage of these mispricing opportunities.
So and you mentioned crypto, though. I would think that crypto would be the perfect kind of thing for this because the market caps are so small, and even for Bitcoin Bitcoin's a little bit bigger, but you go down the list, by the time you're at Solana or something like that, the market caps are pretty small. So have you experimented with that at all?
Yes, but not using the large language models. Just using like good old-fashioned artificial intelligence with the numerical prediction, like more of the machine learning traditional stuff. Yeah, but my guess is that there's a big opportunity. Now the problem is that in order to have a profitable fund, you need to have like a very good amount of assets under management. So something at least like 100 million to $1 billion, and at that point, it gets tricky to trade into
Right.
crypto. Of
Right.
course, as a retail investor, you may just want to put a couple of $1,000s, and there's a big chance there will be a lot of opportunities. Having said that, the way I would think about these technologies is whatever framework you were using to process like text, you probably want to switch to the latest developments. It's not that you should just start from scratch just trading on this because you find out that now we have these technologies. But if you were already in the business, it will probably benefit you a lot to switch to the latest models. And something that we find, for example, in this research that I was briefly mentioning, is that the better your model in the general sense, so like ChatGPT 4, it's better than ChatGPT 3, the higher your investment profitability, let's say.
Interesting.
Uh, yeah, so it seems that it's monotonic, and it seems that you cannot do better than a really large language model, which is something fun because, again, before it used to be the case that you had to develop your own algorithm and it would cost you like a lot of money and technical effort. Now you
Yeah.
can just call these super algorithms, and it's extremely hard to produce anything that's remotely like ChatGPT 4, of course, because of the huge amount of computing power. So I'm not sure if the big funds have the advantage anymore processing information. They still have the advantage on like, executing on the trades
Sure.
and on
Sure.
like research and everything. So,
Yeah. Can you give me an example, just so we can kind of understand, some examples of where maybe you or people that have really benefited from the AI?
yes, I'm guessing on the more on the investment side context. Yeah. So
Right.
honestly, most of the people I've worked with are doing it like professionally and are doing it as part of a system. So they would just incorporate these large language models, the all the information that's coming up from the internet, and generating signals for their team that their team can further use in production. I cannot go on a lot of detail
Sure.
about that
Sure.
for obvious reasons, but that's mostly it. You take a bunch of interesting text from wherever you can, you process them into nice numerical signals, and then you pass the numerical signals to your team along with many other signals, and then you optimize your trading strategy for execution cost,
Yeah.
transaction cost, etc., and so on. And I think where it's a little bit underexplored is on the research side. So it is very, very easy and fast to produce very good research reports with these large language models.
Mhm.
So as long as you have all of the information, so if you give me like, all of the information about a company, it will take me like 5 minutes to create a nice research report summarizing all of the information, exploring, determining whether it looks like a good investment opportunity or not. Again, the hard part is like actually testing that in the past
Yeah.
because we have little data. But it's definitely very useful to just summarize and process information.
Have you been able to like take your own, get a sense for, quantitatively get a sense of how much it's improved your own trading performance?
I do not day trade because it just takes the better part of my
Yeah.
day.
Right. Right.
There used to
Sure.
be a point where I did it, but it's like a full-time endeavor.
Sure. Sure.
So I stopped doing that. But so it definitely. So if you were profitable trading with like text analysis with the previous techniques, it will definitely give you like 20-30% advantage.
Right.
But that's conditionally on you being able to execute at low cost, conditionally on you being able to execute at the right prices, in the right markets, with the right time, with the right constraints.
Right.
Um,
Right. Say you are day trading. How would you start to incorporate something like this? If you're not really familiar with a lot of the technology, like what would be how would you get involved with this? How do you, because a lot of, obviously you might have traders that are used to the traditional ways of the undulations of the market and all that kind of stuff, but they want to add this kind of thing. Where do you even start? How do you go and find somebody to, build you something that you can start using?
Yeah, no, it's definitely a challenge. That's part of the reason why I wrote a book about like how to use ChatGPT and in trading, because there's very little information out there. Like in fact, I was building a syllabus for a class, and there's very few books exploring this question. The way I would go is like, you first have to think on the type of tasks where these type of models would be useful, right? So you normally would analyze how you are doing things and which part of that can be made automatic. So a lot of day traders would like take a look at the prices, but also would be paying attention to what is happening with news and what's happening with the macroeconomy and what happened with
Yeah.
like different regimes, etc. This second part is relatively easy to be optimized, and I don't want to say it's easy, but if like starting from scratch and with the help of large language models, because large language models can also help you code and can also help you like understand what's missing. You can probably build a system in like a week or something that would take a bunch of news and process them and give you like in real time, is this like headline potentially bad for my strategy, right? At first, it can be like a warning system, like, hey, this just happened. It's probably worth paying attention. And later on they could consider it like making automatic. I have this experience on my class. So I was teaching a class for undergraduates slash masters. And then I presented like, a little bit of ChatGPT and how to code in Python. And I think that weekend, one of my students just did this. Like, hey, I'm so excited about the project. I'm so excited about the class. You know what? I spent like all the weekend like coding this, and I was so impressed because it literally, takes the news, process them, gives you like useful signals, and then, well, of course, after that, it's the tricky part. It's the standard part where you have to trade on it or decide if you want to trade on it
Yeah.
or
Well,
combine with other
and then it
signals.
probably gets smarter too, right? I mean, that's part of the whole thing is, you build one of these things, and if it's using artificial intelligence isn't part of that whole mechanism, ongoing trial and error and learning.
Yes, but there's a small caveat, and the small caveat is that the price dynamics change quickly, and the things that forecast returns yesterday may not work
Yeah.
tomorrow.
Right.
So in some sense, there's always little data in finance, so you cannot really train very smart models. And the reason that you cannot do it is because if you could, you would just trade a lot on them with using these models, and then the prices would adjust, and then it would again not be effective as predictors. So there's always kind of like a race between like trying to predict better, and then when you exploit this predictability, it goes away. So you have to restart again. So that at least that was the case with the previous models. Now the big advantage, again subject to this dynamic, is that with ChatGPT-based models, they're just getting smarter in general, so
Right.
they're just able to better understand the world independently of anything that's happening
Yeah.
around it.
Is there any disadvantages to using this? I mean, I know you've pointed out some of them, which are that, but not necessarily that there's disadvantages, but there's limitations. But any
Sure. No,
significant?
for sure.
Yeah.
I guess the big one, as I mentioned before, is a lot of people cannot do daily trading or they do not want to do daily trading. So in
Yeah.
that sense, there's very little data sets where you can test it because you get like 1 year of data, and if you're testing a yearly strategy, then you're done. You cannot do anything. If you're testing a monthly strategy, then it may be a little bit better. So to me, that's the major disadvantage. The other thing that people may not be aware of is that these models are very bad with numerical data. At least they're not great. So if you're trying to just pass like a series of like prices and like volume and things like that and say like, hey, give me a good trade, it's just gonna make something up. Like there's no
Yeah.
way
Yeah.
it will get anything accurately. So that's definitely something to be aware of. Another thing is that it may just make up some information. Sometimes what you want to do is create a scenarios, which is good, and then you ask it the model to imagine different things, and then you plan for those things. Other times you're interested in what actually happened within a firm. So if I just randomly go and ask, what happened with Apple in this year, it may make something up. There's a very big chance it will just make something up, and I cannot use that information credibly.
Yeah.
There's a lot of ways to deal with that, and it involves like passing the specific documents relevant, and then asking about those specific documents. But there's always going to be the chance that these models will make something up, and unless you really know every detail, you may not catch it. In some applications, it's important. In some applications, it's not that important.
You're obviously on sort of the cutting edge of this stuff, and you're applying this, specifically to trading, but you must be thinking about other places where you can apply this in finance. I'm just curious on some of the potential things that you've thought about.
Yeah, no, definitely for sure. There's a lot of interesting areas that I think are around. I detail some of them on my book, and I think one of the most promising one is like customization. So basically, these models will allow you to tailor your financial services to the individual, right? Like before, it used to be very, very costly, for me to like just go and ask for like a private banking, basically, uh, but now. I don't know why banks haven't done more of this, but it's relatively simple to just go and program something that will take all of your characteristics, all of your preferences, and they give you like personalized financial advice, personalized like, description of, oh, what happened with my portfolio? Well, your portfolio in this period did great because you were invested in like technology stocks and technology stocks, blah, 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 or did badly because another reason. So all of these things about like customization and information transmission are definitely severely underexploited. I actually think the most value added would be on that side rather on the trading side because trading is a zero-sum game. So if you win, somebody else loses. Whereas this providing better financial services, better advice, better explanations,
Yeah.
that's definitely something where institutions should be extremely involved.
Interesting stuff. The book again is The Predictive Edge: Outsmart the Market Using Generative AI and ChatGPT in Financial Forecasting. Alejandro, thanks so much for joining us on Wealth Formula Podcast.
No, thank you so much.
Welcome back to the show, everyone. Hope you enjoyed it. And just a reminder, if you are interested with all this talk I had initially at the beginning of the podcast of distressed markets and all that kind of stuff, we got more coming down the pipeline. We had a really good opportunity in North Carolina, and looks like we have something coming up again, another big distressed asset that we're going to gobble up. And hopefully if you are in the position to be an accredited investor, basically meaning that you make either $200,000 a year for the last 2 years, $300,000 of filing jointly, or have $1 million of net worth outside of your personal residence, you are an accredited investor, and you should be signing for a accredited investor club and getting onboarded so you don't miss opportunities like this. So check it out, wealthformula.com. Go to Investor Club. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.